Welcome to TribNet 2025, everyone. My name is Julie Urban. I'm the manager of training and development here at Tribute, and I'm also the co-coordinator of the TribNet conference along with my colleague, Lorna Henderson. I hope you're getting a lot of use out of our breakout session content so far. Last year, we got lots of requests to conduct a session focused on purchasing and inventory again. So I put together a session with lots of tips and tricks to make your jobs easier. So let's get started. This session will benefit more advanced users, meaning you already know the basic processes for processing a PO and you have a good grip on basic inventory functionality in TrueLinks. So this will benefit inventory managers, experienced purchasing agents, people that are new to the purchasing and inventory side of TrueLinks. This may not be as helpful to you, but you're certainly welcome to watch it. We hope you can pick up a few tips. So let's kick off with system parameter maintenance. If you're not familiar with system parameters, they're simply options to turn certain functions on or off. There are some for every area of the system, and I've chosen some that might be most useful, but you can peruse the other options by going to System Parameter Maintenance, which is under the System Administration portion of the menu. First option I want to highlight is the Auto Print Pick Tickets for Transfer Sales Orders. This will control whether pick tickets automatically print when the transfer sales orders are created. This has to be turned on because unchecked is the default settings. Email change PO. This is for users to determine whether or not they want to send a change PO to their vendors. If the box is unchecked, TrueLinks will never email change POs to the vendor. The reason why this system parameter was put in place is because some distributors said that it was confusing for the vendor when they sent change POs. So for those of you who don't know, when you make a change to a PO, like for the quantity, or you add a line to the PO, that creates a separate document called a change PO that just highlights the changes. Sometimes when those were sent to the vendor, they found that confusing, or they thought that it was a new PO and that disregarded the previous PO. So this way you have the option to send the PO, the change PO, or not to your vendor. Print customer part number on vendor PO. When you're special ordering or drop shipping an order, you have the option of printing the customer part number on the vendor's purchase order as a reference. Customer cross-references are set up in customer cross-reference part numbers. So if you have those set up and you turn this option on, those will print on your vendor PO. Transfer inventory without printing the PO. You can check this box if you don't want to be required to run purchase order print before receiving a stock transfer PO. Normally, when you create a PO, it always has to be printed in order for it to be eligible to be received. If you turn on this option, that will remove that step from your process. Require buyer on PO. This will require the buyer field in purchase order maintenance to have a value. We'll talk about buyers here in just a few moments. Now let's talk about some valuable inventory system parameters. Create new items for all locations. Normally, when you create items, they will be created only for the location in which they're created. So if you're in quote maintenance and you are creating a quote for selling location 01 and you add a new item through the quote, the item will only be added to location 01. This option controls whether when you add that item, it will be added to all locations, regardless of the location it's being created under. Allow FIFO inventory valuation method. So there's a modified FIFO model for reporting inventory value on financials, and we have one or two customers that do this. This is because for valuation purposes, they consider that they have used inventory in a first in, first out manner, meaning items that came in on the oldest receipts are the first to be sent out when those items get sold. So it's kind of akin to how a grocery store stocks milk on the shelf. They rotate the stock. That means the oldest jugs are put to the front, so they get sold first. The more recently received jugs are in the back and don't get sold until the older milk is gone. So a customer might consider the items they have in inventory as if they were the most recently received PO receipts, whether or not that is actually the practice in the warehouse. So when they determine their value, they look at their most recent receipts in order to determine the cost of inventory. So this option will allow you to value inventory on the inventory valuation report using the FIFO method. So if this option is turned on, there will be an additional checkbox on the inventory valuation report that allows you to tell it to value by FIFO rather than by average cost. Let's talk about some special order PO parameters. Create planned PO for new POs. So you're going to want to check this box for TrueLinks to automatically turn every new purchase order created into a planned PO rather than an actual PO. That option will be most valuable for users who make a lot of POs in a day that need to be reviewed and approved by a manager. So this would include planned POs created through the quote and planned POs that are created in purchase order maintenance. Create planned PO for outside vendors. When a customer service rep changes the source on an order to an outside vendor, this is in quote line maintenance, TrueLinks can default to creating a planned PO rather than an actual PO. This feature is useful if you want to limit the number of purchase orders you send to the vendor during the week. Lastly, we have the option called Update Special Order PO line from Sales Order Line. So when you change something on a sales order and that sales order line is connected to a special order PO, if this box is checked, whatever change you make on that line will automatically change on the purchase order as well. Next, we're going to talk about some tips for making the review of your POs more efficient. So the first tip we have is to default your buyer name on POs created by the buy job that you set up or that you ran under your user ID or were created by you in purchase order maintenance. That's going to require setting up a buyer and then setting up some default behavior for that buyer to land on the PO automatically. Once that's done, you'll be able to filter your planned POs by buyer. This is going to be most beneficial to those who have multiple buying agents responsible for specific product lines. So first, you're going to set up the buyer in buyer maintenance. You can call the buyer whatever you want. You can use initials. It could be first name, last name. It could be just first name, however you want to define it. Fill in the details below that because that info will appear at the bottom of the PO as contact information for questions if vendors have them. Now that we've set up the buyer, then we tell TrueLinks to default that buyer name on any POs created in PO maintenance or for any buy jobs that generate planned POs that are created under this user ID. You'll fill in the user ID, choose the can value of buyer where it says user default, and then put in the buyer name that you set up in buyer maintenance in the default value field. Another tip for making your filtering of POs more efficient is to show you a different way of reviewing the multitude of POs because it can be cumbersome. So for those of you who don't know, you can use the looking glass option on the toolbar to bring up a find box that allows you to filter by buyer name and to only look at planned POs. Using the looking glass option allows you to select multiple records for review at a time rather than just one, like using the binocular search would do. So it's going to return multiple results, and then the next and back buttons on the toolbar will be enabled so you can walk through your POs on the screen. So this is just showing you, if you scroll a little bit further down in the purchase order maintenance find, that you can also filter down by buyer. Here you can filter only planned POs, scroll further down, and then you can filter it by buyer. If you don't like reviewing things on screen, the purchase order report can be printed or even previewed to review your planned POs. You just have to be sure to select the standard PO type, make sure it's only going to show planned POs only, and put in a date range of whatever day's POs you want to look at. And here's a sample print of the report. It shows basic information like the PO number, the vendor, and then you see the line item detail along with the quantities. We get lots of questions about these particular parameters in the buy job screen. The purchase type gives you the options of standard, customer minimum, or both. The standard option will allow the job to review specified items or product lines for purchase based on normal triggers, which are the reorder point and the inventory position. By contrast, the customer minimum option will find items that are stocked out, or more specifically, have a negative inventory position. A negative inventory position simply means you have more committed to orders than you have in stock. We recommend running the customer minimum type at least once a week. Now let's move over to the reorder point percentage. Just a little background on how the buy job is triggered to buy before we define this parameter. The buy job will look at the reorder point of the items, which could be the min stocking quantity or a calculated reorder point, depending on the buy method you use. The reorder point can also be thought of as a threshold to help trigger buying. The job also looks at the inventory position of the item. The inventory position is a quantity that is calculated by looking at what you have, what you need, what is already on order with the vendor, and what might be being built currently for stock. If the inventory position is at or below the reorder point, then the buy job is triggered to buy the item. The reorder point percentage then is used to raise the reorder point number so as to raise the likelihood that an item's inventory position will be at or lower than the reorder point, thus resulting in more items being purchased. This is most useful if you need to get ahead of buying. For example, if your vendor is planning a temporary shutdown over a period of time. This wouldn't be a setting that would be used daily. You would only use it as needed. The run as central warehouse option is for those of you who have a main branch that is responsible for monitoring the inventory levels of all the other branches and then purchasing for those branches. In order for this option to work properly, all of the items in your branch locations have to have the primary purchase from vendor set to the main purchasing location. And then the items in the main purchasing location should have the primary purchase from vendor set to the actual vendor. Then the buy job will create POs for the actual vendor and then stock transfer POs for the branch locations. If you are a smaller distributor, running your buy job with wide open parameters works just fine. But if you're a larger distributor with lots of product lines to manage, buying groups might be very useful for you. This allows you to group specific vendors and product lines together in a group, and then you can specify that group name in the buy job selection criteria, thus allowing you to space out buying throughout the week. For example, if you review specific product lines once a week, you could create groups called Monday, Tuesday, etc., and then group the product lines into days of the week. You can set up your Monday job to look at only the Monday buying group of vendors and items. And you can see how this will break up your buying into more manageable chunks. Buying groups are set up in buying group maintenance. So you'll just give your group a name. You see in my example, I called mine Monday. And then you select from all the product categories on the left and move the appropriate ones to the right. And those will be the ones that are in your group. And then when you run your buy job, you can specify your buying group in the buy job criteria. This means you don't have to enter anything else in the vendor or product category field since the buying group has both of those covered. Now let's talk about purchase order acknowledgements. How many of you are aware of or use the purchase order acknowledgement line process? This can be used after you issue your PO to the vendor and they reply with updated delivery dates and or updated costs. We recommend using the screen where possible because you're better able to quote accurate delivery dates to your customers, make your PO costs accurate, which helps the vendor invoicing process go more smoothly. The PO expedite reports can also be run by expected date instead of promise date. So here you can see that you can change the delivery dates on your line. So this is the screen, and you see there at the top that you're allowed to include already acknowledged lines. So if your vendor sends you a second update or a third or a fourth, you can still pull up those lines and update the date or the cost on that. So when you click post on the line that's in the grid, you're going to get this pop-up and you see you have the option to change the expected date there. You can also change the unit cost on the PO using this screen. Any column headings that are capitalized mean that the user can modify the information in those cells. So you can put your cursor in the cell below unit cost, and then you can just type in the correct cost. And this will correct the cost on the PO, which means later on down the line, when the vendor invoices you, the expected cost and the vendor cost will match. And then you see in the purchase order expedite report, which is your open PO report, you have the option now to run it for expected date, which would be a more accurate date than the promise date. And those dates are going to show up then in various inquiries. The purchase order inquiry is one of them. So you see I have the date ordered, the date required, and the date expected. Now we do have an idea out on our ideas portal, which are simply enhancement requests. I have the link at the bottom of the screen of the slide showing you the link to our ideas portal. For those of you who don't know, that's where we keep our enhancements, and then users can add comments or vote for those enhancements. So you see at the bottom that it's tallying up the votes, and then there's a vote button on the screen to allow you to vote for an enhancement. So relevant to what we're talking about, we have a request out there to make the acknowledgement more useful. So the idea number is 6875 if you want to go out there and do a search for it. And then you can vote for this or add additional comments. If you don't currently have access to the ideas portal, you can email Don Benson at don j.benson@tribute.com, and he can set up a login and access for you. Now let's talk about identifying cost errors. If you've ever seen this error message when you're entering a PO line, what it says is that no valid cost break records are defined. So it tells you that it can't calculate the cost because of that. So the option is to enter a cost override, which you can certainly do. But how do we find and fix the problem long term? This is where we will use the item cost inquiry. The item cost inquiry shows you every cost record set up in the system for an item and vendor. And that starts with the baseline record, which is item vendor price maintenance, where the vendor list and the replacement costs are set up. And then if you have any cost schedule records, special price agreements, or emergency discounts set up, those will also show up in here. If you scroll all the way over to the right, you'll see there's an error column. If you received an error in purchase order line maintenance about no valid cost breaks, this is where you can go to see which record is causing the problem. So you see here, I see the same error on my record here in item cost inquiry. And that happened to be a cost schedule record that I have set up. So I went to my cost schedule record, and item cost inquiry will tell you if it's a cost schedule by vendor and item, by vendor and VPC, and that way you'll be able to easily identify which cost schedule screen you should go into. In my case, it was set up by vendor and item. So I pulled it up, and I just noticed in the general tab that it is discounting off of purchase list, which is an item vendor price maintenance. Then I just want to go and make sure that my cost breaks are set up. So I have cost breaks set up in here, but a lot of times the error will occur because I have no cost breaks. So in other words, the cost schedule record is incomplete. So sometimes adding the break IDs and the break values will fix the error. And then the system will be able to calculate a correct cost when you enter the PO, enter an item on a PO. In my case, I already have break values set up. So now, since I know now that the discount is scheduled or is done off of purchasing list price, I'm going to go look and see if I actually have a purchase list set up in item vendor maintenance. So you can see that there is no record there. So purchasing list and vendor list are the same thing. So I see that there's nothing there. So the system can't calculate a cost because I don't have a purchase list to calculate the discount off of. So once I add that record and save it, then the system will no longer error for that particular item and vendor. It will be able to calculate a cost. So the point being is to use item cost inquiry to figure out why the system can't calculate a cost for an item. Receiving the wrong PO line is a fairly common issue. This is going to impact your inventory accuracy because the wrong line was received. It's going to impact purchase order accuracy in accounts payable because they won't be able to voucher the correct lines. How you fix this mistake depends on where in the PO process you catch the mistake. So there are two potential places where you can fix it. After the PO receipt, but before the voucher entry, or after the voucher has already been entered for the wrong PO line. So if you discover it after receipt, but before voucher entry, you're going to use purchase order receipt adjustment transaction and just fix the amount, the amount you received. So you'll pull up the line that you incorrectly received and adjust it back out. In my example, I received 10. And so the adjustment quantity in here is going to be minus 10. So I can take the purchase or the receipt quantity back to 0. Discovering it after receipt and after the voucher is entered is a little more complicated because we have to fix a lot more areas to get us back to baseline. So first, we have to adjust out the inventory quantity we wrongfully received, and we're going to do that in inventory adjustment transactions. Then we're going to go back to the PO, and we're going to add a new line to the PO for the line that you incorrectly received, because we've adjusted it back in, and we're going to need to receive that later. So we're going to add a new line. And that's because it can't be unreceived. So a new line has to be used to receive against later. For the payable that was entered for the wrong line, you're going to have to do a debit adjustment in voucher batch maintenance against it to reverse it out. And that way we're not going to be prompted to pay for it later when we do a check run. When you do that debit adjustment, you're going to have to choose a inventory adjustment expense account to post the other side of the GL posting to. Sometimes that account is called inventory variance. That's our recommendation, is that you post to inventory adjustment expense. However, you should always consult with your accountant on how they want to handle it. Now that we've done all those steps to correct the incorrect process, now you're ready to receive the correct line and voucher it as normal. Then the question comes up, if it was a drop ship, that adds another layer of complication because a customer invoice also gets generated after the invoice gets posted. So to correct this, we're going to have to do an invoice correction on the customer invoice to credit out the invoice that was generated. Then we're going to have to do a debit adjustment in voucher batch maintenance against the voucher to reverse out that payable. And then we're going to be able to voucher the correct PO line and generate the correct customer invoice. And then since the wrong PO line can no longer be processed further, you're going to have to add a new PO line using the quote or sales order. And by the way, if you have one line on the PO and you received it, that is going to set the PO line to closed. So there is a transaction screen called Reopen PO Transaction. So you can reopen the PO to add a new line, and that will satisfy the ability to add a new line where you need to. If you would like a way to simplify this process more, there's an idea on our ideas portal asking for us to create a way using the program Voucher Maintenance to edit a voucher after posting if the incorrect PO line was vouchered. So you can vote for this by logging into the portal and searching for idea number 1417 and then clicking the vote button to vote for it. So the reason why voting is important is because the higher the number of votes on an idea, that pushes it further up the priority chain for our development team. Now we'll take a minute to talk about vendor returns. First, let me show you the process flow for vendor returns if you don't currently use them. First, you'll enter a vendor return in vendor return maintenance. Then you can print a vendor return notice report to send to the vendor to let them know that some items are being returned. And then we're going to print a pick ticket. And there's a specific program for vendor return pick tickets called Vendor Return Pick Ticket Print. And then once that pick ticket prints, you're going to run vendor return shipment confirmation process, and that will remove the items from stock. And then optionally, you may or may not have to run the program finalize vendor return transaction. And we'll talk about the circumstances under which you may have to run that. All right, so there are some important settings on the vendor return itself that are very important to know about and know how they're going to affect you downstream. So let's start with the freight chargeback field. This is the dollar amount of freight to be repaid by the vendor on a vendor return. So for example, on items shipped in error. This is often the inbound freight amount you originally paid when you purchased the item. So this amount will be added to the debit voucher that is created for the vendor return. So when I say debit voucher, I mean the credit that is issued by the vendor. Let's move over to the right of the screen and we'll start with the apply restocking charge checkbox. This is indicating whether this vendor return to branch charges a restocking fee on returns. The restocking percentage is set up in item vendor maintenance. This restocking fee will be subtracted from the debit voucher created for the vendor return. The debit return freight checkbox indicates whether you will ship returns at your own expense or if the vendor will pay the freight by adding it to the amount of the debit voucher created for the return goods. The vendor may pay the freight charge under certain scenarios, for example, if goods were shipped in error. The OK to ship checkbox indicates that this vendor return is ready to be shipped using vendor return shipment confirmation process. You may want to uncheck this box if you need to finish adding or maintaining lines for the vendor return, and then you can go back and check this box when you're ready to pick and ship it. The finalize when shipped checkbox indicates whether a vendor return should be quote unquote finalized at the time of shipping or at the time the credit is received from the vendor. If this checkbox is selected, a vendor return will be finalized when it is shipped. This indicates that the vendor has confirmed the return and issued a credit. But sometimes when you create a vendor return, you're not sure at that point whether the vendor will accept it. For example, you want to ship damaged goods back to the vendor, but the vendor will not issue a credit for those goods until they've had a chance to inspect them. If this is the case, don't select this box in vendor return maintenance. When the vendor later accepts the return, you can manually run finalize vendor return transaction to finalize the return and set the debit voucher as OK to pay. So to be clear, finalizing a vendor return, whether that's by checking the box on the vendor return or by running finalize vendor return transaction, that is the step that issues the debit voucher against the vendor account in TribNet. It will be done automatically in the background. That finalize when shipped checkbox is often used along with the whole debit payment checkbox. The whole debit payment checkbox will set the debit voucher to be on hold when it is created, which means that the OK to pay checkbox won't be selected. So that means when you go to do a check run, this debit will not be selected along with the other vouchers and debits in the system to apply against the amount that you're going to pay the vendor. When you later run finalize vendor return transaction, it will select the OK to pay checkbox for you on the debit voucher. Lastly, if you want the vendor item to be required, you can check that box. And if an authorization number is required on the return, you can check that box. Another important setting is on the vendor return line. You'll be prompted to select a bin where you want the quantities to come out of that you're sending back to the vendor. Sometimes the quantities are not in the stock bin, but we often select it by default. Sometimes the quantities are in what's called a return bin. So if you did an invoice correction and you chose to quarantine those returned items, they will be in a virtual bin called return. So if you select the stock bin and it happens to have 0 quantity in it, but the quantities are actually in the return bin, you'll end up with a negative on hand in the stock bin. So it's important that you hit the binoculars there next to the bin, and it will show you the quantities that are in all the bins for this item in the system, and that will help you to select which bin to select the items to come out of when they're shipped back to the vendor. And then you can use the vendor return inquiry to see vendor return information, but also to track the status of the vendor return. In other words, what stage of the process is it in? So the possible statuses that you might see are open, which means the return was created in vendor return maintenance and no further steps have been performed. It might say shipped, which means that it was processed through a vendor return shipment confirmation process. It might say finalized, which means that the return was finalized during the shipment, or finalized vendor return transaction has been run. Or it might say canceled, which means that canceled vendor return transaction has been run against the returns. So let's switch to our inventory managers for a moment and talk about some valuable things that you can do in the system to identify incomplete item setup. So as you know, incomplete item setup can cause a domino effect of problems, especially if you allow sales staff and others to add new items to the system through the quote. How do you keep track of whether they were entered completely? Because you know that when you set up an item, it's not just set up in one screen. There are multiple screens that need to be set up in order for them to work properly. So there is a job in the system, and this is under the system administration portion of the menu, called the missing data detection job. And it will go out and review the records that you tell it to, and it will tell you which ones are missing some information. So you specify a location, and then you can select a max number of records that it can return. That is most useful if it's the first time you're running it. You may get hundreds or thousands of records. So the first time you run it, you may want to put a number here to limit how many items are returned. And then there are checkboxes below that where you tell the job which transactions or items to review for incomplete setup. So for our purposes, I've highlighted the item vendor records and the item vendor versions. So in other words, this is going to look for items that are set up in item maintenance that don't have records for item vendors or item vendor versions. Those records contain things like the purchase multiple, the VPC, the price, the replacement cost. Those are important records to have, and it will stop the system from creating purchase orders. The buy job won't be able to create purchase orders if there's incomplete item setup. That's just one example of the repercussions of incomplete item setup. So in here, you can tell it to look at item vendors and item vendor versions, run the job, and then in the job messages inquiry, it will be nice enough to show you which records are missing, but also tell you how to fix it. So you can see here, I've got an item that's missing, and then it tells me how to fix the record. It tells you exactly where to go. The nice thing is you can also, if you get a lot of records here on the job message inquiry, you can highlight the line items just like you would in an Excel sheet. You can highlight a group of lines and then right click and export them into Excel. If that makes it easier for you to kind of go through line by line to figure out which ones need to be fixed. An important topic for inventory managers is forecasting. The forecasted values in TrueLinks affect many areas in the system, so their accuracy is critical. The forecasted monthly demand influences the buy quantity if you're using a forecasting buy method like target turns. It's also used to calculate safety stock quantities, review cycle quantities, and min buy override quantities, which are all set up in inventory management group maintenance. Those are all critical parts of buying. The forecasted lead time helps inside sales to estimate delivery dates they give to customers. It affects the timing of the commitment of sales orders, which directly affects the timing of pick ticket printing and the timing of when an item comes up for buy. Inaccurate forecasted lead times can also drive up expediting costs if your forecasted lead times are underrepresented. We don't have the proper time today to dive into this topic in a way that gives it justice, but we do have a video available on our video portal called TribNet University. And you can rent the video, or you can purchase the suite for 90 days. So we have 3 inventory management videos in the suite. And because you attended this session, I've created discount codes for the video rental. So you can use TNET5 to get $5 off our inventory management forecasting video. This discount code expires August 31st. And then if you want to buy the entire bundle of inventory management videos, rent them, you can use the code TNET10 to get $10 off that bundle of videos. I put the TribNet University website link up at the top. So it's tribnetuniversity.tribute.com. If you already have a subscription, you'll be able to watch these as part of your subscription. If you don't, those codes that I put there are for renting. All right, let's talk about the key indicators to keep track of if we're trying to gauge our inventory success. So the 3 key indicators are inventory value, turns, and customer service levels. The challenge with inventory management is always keeping cost and service levels in balance. So when we're looking at some of these values, we're going to be looking at trends over time rather than focusing on specific moments in time. So you can view inventory value and turns value in the business activity inventory display, which can be found under the system administration portion of the TrueLinks menu. So here's the business activity. You can choose a year and a period and a location at the top. You can also leave the location blank if you want to look at all locations, but typically you would want to look at a specific one. And then you see that we can gauge inventory value, and we keep a 6-month tracking record of inventory value. So this is where it's important to look at trends over time, not focus on one specific value. And then you can see that it keeps track of the percentage of the change in value at the bottom, right below the values. So as a general rule, your inventory should not be steadily climbing unless there's a specific reason that you know it's going to climb temporarily. So that could be a possible indication that you're buying too much and you're not turning the inventory over. But you know your inventory best and your locations best, so you know what you'll be looking for here when you look at these values. We also track the turns values. So the turns, of course, indicate how many times you're turning over your investment in inventory. If you belong to a particular trade association, they will have reports every year that you can get for free that give you benchmarks for these kinds of numbers. But a general rule is 4 to 6 turns a year. And you're always going to focus on the non-Z turns because Z-class items naturally have a high turnover. So you see we track the turns by 3 months, 6 months, and 12 months. And then you see at the top, we also have a non-Z monthly turn. So as a general rule, you're going to focus on the 12-month turns because that gives you an idea of how well, that's the one that's really going to give you an idea of how well you're managing inventory. So that one should be somewhere in the 4 to 6 turns range. But again, consult your benchmarks that come from your particular trade association for more information. So overall, the values here are going to show you how well you are buying inventory and then turning it and then selling it instead of your inventory climbing. So this gives you an idea of if you're buying the proper amount, if you're overbuying or underbuying. And then inventory availability directly impacts customer service. So we have a customer service level report in TrueLinks, and that's going to be under the accounts receivable section of the menu. And this report is used in a number of areas in the business, right? So operations might use it as a tool for gauging the overall service performance. but inventory managers can use it as a gauge for how well they're stocking a location. For example, if you see a trend in partial or late shipments, that could indicate an issue with having sufficient stock to meet demand. So you see, you can group this information. We've got lots of selection criteria here. We've got date ranges. We can base the days late on required date or promised date. And then I can group that information in this group by drop down. And then as I choose the information on the left, on the right, it's going to show me what the sample output is going to look like based on my groupings. And then I can choose to show invoice detail and only show exception invoices or show all invoices. And I can also show the actual number or a percentage. So I'll show you a sample output here that gives you a little bit of an idea of what this looks like. So in my case, I've chosen to show it a percentage. So it is showing me a percentage of on-time dollars and then days late. So in my example, I have some on-time dollars that were 56% on time for this particular customer. And again, I chose to group mine by SPC and customer. And then I see that I've got ranges of being late. So I have 43% that were 1 to 10 days late. That's 40% of the lines for this customer and SPC, and on and on. See that. And then at the end of the report, it's going to show you the same values as a grand total. So you can see overall as an organization, or sorry, as a location, how well you're servicing customers. So if there's a particular SPC, for example, that is showing routinely as being late, that might be an indication to an inventory manager that that particular SPC needs to be managed better. And when I say that, that might mean, excuse me, that might mean changing your settings in inventory management group maintenance. All right. So if you have questions, there's a live Q&A in our Eventify app. So if you have questions, you can put them in that live Q&A. And I will be checking that throughout the week to see if I can answer any questions. You can also send me an email at julie.urban@tribute.com. So my challenge to you is to just implement a few of the things you learned today in your processes and then drop me a note to let me know if it helped. So thanks for watching today and enjoy the rest of the conference.